All right, we're live. Thank you so much for joining me. I'm Mitch Goldberg, your host. You're watching Be the Boss of Your Money. Couple of things to take a look at today. But the title of the show today, this is going to be a brief one, and actually think it's worth being brief because there's really not much to say about the subject. And I think I've already made up my mind. So the title of the show is it worth preparing your investment accounts for a recession? I'll give you a quick answer. The answer is no. Uh, I'm saying no, and some of you might think, well, that's stupid. Why would you let money go down the drain? Or why would you act to protect something? And it's it's not that I'm not acting to protect my own wealth and that of my clients, but to actually get ready for a recession, which you may or may not see coming, you probably won't. And by the time you figure it out that we're in a recession, stocks are already down. And most people just they reconfigure their portfolio, they move their money around, they change from horse to horse to horse mid-race, and usually they wind up blowing themselves up. They forget that they're long-term investors. They forget that recessions and down markets and bear markets are all part of the investing process. And everybody, not everybody, but a lot of people think they'll get out. Oh, there's a recession. I'll get out when things are bad. And when things are good again, I'll get back in. What that means is they sell low and they buy back high. And the same people do the same thing over and over. So let's take a quick look at how the market did today. Pretty big rebound. I would say at this point, what three quarters of Monday's sell off has already been regained by the market. And it's turning out to be not such a bad week for the stock market, down a little bit, but the overall week, it's not been so terrible. Okay, so here's the intro. I'll be right back. All right. Thank you for joining me. Still wrestling with the remnants of a cold I had over a week ago. It just doesn't go away. But while you're watching this, give it a thumbs up. Whether if you're watching in the live or the replay, you have any questions, live or replay, ask me in the comments. I'll be sure to get back to you. I'm hearing from you. The type of questions that people ask me is, what should I do now? I mean, when things are calm, it's more like, am I on the right track? Am I doing everything I can to maximize my money? And if you're not asking me, I'm asking you, are you being tax efficient? Are you taking advantage of Roth IRA conversions? Are you taking advantage of doing things to mitigate taxes? I'm not your CPA. I'm not your tax advisor. So you should always check with a qualified tax advisor professional when it comes to taxes. But in the normal course of business, this is just one of the things that I do have to talk about because it comes up in conversations, and I'm always happy to speak with my clients' accountants as well. It's part of the service, and quite frankly, I learn a lot that way. And I've developed some really nice relationships with my clients' accountants, and it's led to referrals. So it's always a good thing to be open to it, right? I know a lot of people are territorial. I don't want them looking at the work I'm doing. I don't need somebody looking over my shoulder. I think that's kind of silly. If you're proud of the work you do, you show it off, right? All right. So, should you get ready for a recession? First, let's take a look at how the market did. Okay. So, the Dow was up almost 700 points today. Pretty good, up almost 2%. NASDAQ up almost 3%. S&P up over 2%. Oil up a little, but that's, oil going up means we're not going into a recession, right? Because we're going into a recession, oil demand goes down, prices go down. So not necessarily a bad thing. The U.S. 10-year rose a little bit. It did trade at 4% for a good chunk of the day. The VIX continues to come in. Remember, we were at like a 60 VIX, 50 or 60 VIX on Monday, down to 23. So things are calming down. The Russell 2000 was up almost 2.5%. And by the way, every Thursday, first time unemployment claims come out, or actually new unemployment claims come out. They were lower than expected, which is a little indication or a sign of relief that maybe the labor market's not actually falling apart and is just steady Eddie, but at a lower rate of growth than it was before. And that's what sent markets up today. And that's what sent rates up, interest rates up a little bit today. So, not all is bad. I know there are some politicians who make hay out of a down market. What are they saying about today? And you can't take credit for all the up markets and give away credit for all the bad markets. That's what I say. I really want to get you away from making decisions about your investments and your money based on short-term political theater and really focus on policies. In any event, Dow was up today. Let's take a quick look at those magnificent 7 stocks we talk about all the time. NVIDIA, nice day, up 6, back over 100. We spoke about that yesterday. The longer it was under 100 yesterday, which is to me a bad sign. That's just my own opinion. Technically, a breakdown in the stock on the chart, but the longer it holds below 100, the more people get used to it. The more people start to give up at least short-term hope that it can rebound. But today it did rebound over 100. I think that's a positive. Meta up 20. That is doing really well. And of the Mag 7 stocks, that's the one that's holding up the best as being closest to its former high. Apple, Microsoft, they were up across the board. And of course, listen, when these stocks are all up, the major averages are all going to be up just because they have such a big weighting in the S&P and the NASDAQ. And some of them are also in the Dow Jones Industrial Average. By the way, you cannot invest directly into an index, but you could invest into a security that tracks or mimics an index. All right, so let's get into, should you prepare for a recession or not? All right, I don't think it's worth preparing for recession. This is the conversation I've been having with clients. I've had this conversation with some of my clients in the past because some of my clients have had for over 30 years. And managing a portfolio is not something that you do during calamitous markets when all hell breaks loose and you go, now I'm going to do something. No. Managing a portfolio is a consistent thing you do based on a client's changing metrics of if they get older, they could be closer to needing the money from their brokerage accounts, from their investment accounts to pay, to paying their bills. They're closer to needing that money to paying their bills. So we scale back as they get up in years. When they have stocks that become too big a portion of their portfolio, you scale some back and you put it into something else. It doesn't mean, for example, that you sell NVIDIA that's up a lot and put the money into Microsoft or Google. What it could mean is maybe you take that money and put it into a bond, a municipal bond, a T-bill, maybe small cap or mid cap, but something different. Use that opportunity for something for diversification. Well, I have to say this. Diversification is a strategy that we use to mitigate risk, but it doesn't necessarily protect your portfolio from going down in a generally down market. That was perfectly evident on Monday when the Dow was down over 1,000 points, by the way. But it could mean your portfolio goes down less than the overall market, which means your portfolio could recover faster than the overall market. So there's advantages and disadvantages. Okay. Just cough. Every time I talk, I have to cough. But there are advantages and disadvantages to diversification. Diversification is a compromise. You're giving up something to get something. And it just has to be worth it to you what kind of upside you would give up to accept potentially a more limited downside. And that's different for everybody. And that's what we discover here with you when we work with you one-on-one, by the way. So getting ready for a recession, people think that they have to do something. And the news, I think, pushes that. You see whatever news you're watching, whether if it's financial news, regular news, we could be going into a recession. Your portfolio could be going down. What if we go into recession? The Fed has to avoid a recession. If we go into recession, the market could go down. Just calm down, will you? Markets always go up and down. That's That's part of the process. Personally, I am already resigned to accept that they're going to be down days, weeks, months, and years in the market. I accept it. It doesn't mean I get out of the market. It doesn't mean I play with my portfolio and try to go for more consumer staples, less in industrials, or I'll trade more into bonds and less into stocks. I don't think reacting I don't think reacting that way is going to help. Most likely you'll be wrong or you'll get the timing wrong. And I think more people have lost money trying to navigate recessions or perceived recessions or perceived coming recessions by making silly moves in the portfolios than the actual bad event itself. And then what you wind up doing is you go from this stock to that stock and you keep going like lower, 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 lower. And you're hoping that one day you're going to hit that magical moment where you get the exact bottom and you ride everything to the tippy top and you're all set. Now you can afford to retire and everything will be okay. It doesn't happen that way. You make changes gradually based on changes in your own life. I don't make changes in clients' portfolios based on a bad day, week, month, or in the market, or even a bear market. I think it's a waste of time. And I think you're making changes based on things that you have no control over. And a lot of the things that you're worried about don't actually come true. So then you made changes for nothing. So that's why I don't think it's really worth trying to get your portfolio ready for a recession. Your portfolio should just be right for you. And by extension, that means it'll be ready for whatever comes next in the economy. Thank you so much for watching. I appreciate your time. And if nothing crazy happens tomorrow in the market, you won't see me until Monday. Peace out.